Hey guys, and welcome to today's video. So in today's video, I'm going to be sharing with you an order block trading strategy you can use to profit in the forex financial market. And to prove to you that this particular strategy actually works, if you apply step by step the information I'm going to be sharing in this video, I'm going to be showing you a screenshot of the trades I took this week Friday to profit using this particular strategy. So without further ado, let's get right into it. Right here from my journal is the before of the trade, and right here is the after of the trade. So if you look at the before of the trade, you can see that price expanded to the buy side and dropped down into this particular red line. This red line is actually the order block from the daily time frame. We had a reaction in price and we had our entries right there, putting our take profits above these equal highs and putting our stop loss below that low. And you can see after of the trade, we can see our price expanded all the way to the buy side, attacking our take profits and giving us profits in the forex financial market. So without further ado, let's go over the step-by-step approach you can use to profit with this particular strategy. So for you to profit actually using this particular strategy, first of all, you want to conduct a pre-market analysis. And the focus of the pre-market analysis is actually on institutional order flow. Now, when we talk about institutional order flow, we're actually talking about point of origin, which is actually a PDRA, in other words, an area of liquidity. We're talking about displacement, and we're talking about what sides is the price or market respecting. The next thing we're going to be looking out after we've identified the institutional order flow is execution analysis. Now, the focus on the execution analysis is time and liquidity. So, under time and liquidity, we're looking at a particular time zone, either using the ICT silver bullet or the London or the New York Q zone. Then we're looking out for displacement within that zone. We're looking out for reach of liquidity, then a reaction in price, then an area of target, which is going to be the next draw on liquidity. So let's see how we can apply this and arrive at the same result you saw in the screenshots. So right here on the right hand side of the chart, we can see that this is the Euro USD markup on the 1 hour. So if I zoom that in correctly, you can see the markup I already have outlined right there. But I'm going to be clearing all the markups I have, and I'm going to be going over this particular process from the scratch so you can better understand this particular idea. So I'm going to be clearing everything out. So this is the chart just as clear as it can be. So these on the daily time frame, that's where we're going to start the analysis because it's actually a day trade. So we're going to start the analysis from the daily time frame. So looking at the left side of the chart, the first focus of our analysis is the pre-market analysis, and the focus of this particular analysis is identifying institutional order flow. And talking about institutional order flow, what we want to identify first is the point of origin. And when we talk about point of origin, we're simply saying where is price coming from. So you can see right here that price actually ran this low, and since price ran this particular low right here, price has actually been moving to the buy side impulsively. So this particular area becomes the point of origin. But this particular point of origin is actually validated by the next point, which is displacement in price. So the moment we had this weak rejection and the close of this particular bullish candle right here, that validates this particular zone right here as a point of origin, because you don't want to see price come back and cancel the point of origin. If that happens, that means that particular point of origin was never a point of origin to begin with. So you want to see displacement in price. So displacement in price confirms your point of origin. For those of you wondering, what if price reverse and take me out from that point of origin? So this is how to confirm your point of origin. You want to see displacement in price after that point of origin. So you can see after a displacement in price, price engulfed this particular series of down close candle, which identifies here as a order block. So on the daily time frame now, we already have an order block. So that's going to frame our support ideas if we're going to keep moving bullish to the buy side. So the next part of the analysis is what sides is price respecting. So we can already see clearly that the market is pushing to the buy side. So for further analysis, you can just drop down to the 1 hour, to be precise. You can drop down to the 1 hour, and prior before this particular day, we can see that series of lows, this particular low has actually been respected. But we can see highs. This high was taken out, this particular high was taken out, all this series of highs on this particular region was actually taken out. So with that out of the way, we already know that institutional order flow is purely and truly bullish rather. So the next part focus of your analysis is going to be the execution analysis. So now this brings us here into the 1 hour. So we notice that at the start of the new day, mind you, this particular line right here is the daily time frame order block. So I'm going to outline that for better clarity. I'm going to outline that. Let me write that out. That's daily OB. OB to be precise. So we can see right here that this is the daily time frame order block. So for clarity, it's better I mark that out. So you can see this the daily order block line. So we notice if I zoom in properly, for those of you that want to see it, if I zoom in properly, you see once this particular day started on this particular time period, you see the way price dropped into that particular order block and reacted from it. And the moment price reacted from it all the way, it canceled this particular high. Now, if you're familiar with my content, you can actually enter at this particular area. You can actually enter at this particular area without identifying the remaining part. Why? Because we already have a reaction in price, which is a W pattern right here. So we can see the moment price cancel here, that's already an institutional market structure shift showing that, okay, we've already found support on the order block, and this particular area can also serve as an entry. But if you want to be more refined and more precise as possible, what you can do is to follow the analysis to the T, and which I recommend. So the next point is that you want to focus on time. So now when we talk about time, we're talking about the London session, because we're trading the Euro USD, because that's where we're going to see more volume coming to the market, and the smart money want to manipulate price in their favor. So we're going to mark out that time. So we're looking at 9 charts time, which is 3 a.m. New York time, and to 4 a.m. New York time. So I'm going to put in it on 11 charts time, which is 5 o'clock New York time. So within the time window of 3 to 4 a.m. New York time, that's the time zone we're actually focused on. So within this particular time zone, we're looking for a displacement in form of a manipulation in on or either a run on liquidity you're gonna get, or it draws a fair value gap. So if you look at the daily time frame, we have actually, if you look closely, we have a series of fair value gap here to the sell side. So I can actually um change this. Let's change this to my color here, the blurry wood. So for better clarity, so you can see that there's a fair value gap right there. So to refine it and see the liquidity, you can drop down to the 5 minutes right there. You draw down to the 5 minutes, and you can see if I zoom it properly, bring in the whole chart here, you can see just above that particular fair value gap on the 1 hour, we can see a series of liquidity right here on the 5 minutes. So you can see the way price came here, ran out the liquidity, and bring the cross here. You can see the way price ran to the sell side, running out all this liquidity, went to the buy side, came down again, ran this particular liquidity, tanking fully into this particular 1 hour fair value gap. And from there, we had a reaction in price, which is a W pattern. Price went down, went up, came down again, and went up. So at this particular point here could be your entry. So you can frame your risks to reward, putting your stops below this particular low, because you have double supports on this particular area. We have a support from the daily time frame order block, and we have a support from the 1 hour fair value gap, and also a support from the 5 minutes run on liquidity. So you can see multi-time frame analysis is giving you that solidity in finding support in the marketplace. So this can be your entry right here on this particular zone, and you can aim going back to the 1 hour. You can see you enter this particular zone right there, and you held all the way to this particular area. So mind you, I said the next area you want to focus is an area of target. So for area of targets, going back to the 1 hour, all you need to focus on or targets, like you saw on the screenshot, is this equal highs over here. And you can see the moment we entered at this particular region, you can see the way price move impulsively, attacking this particular high right here. And for those of you wondering why this trade was even more convincing, so I'm going to expand this particular screen, and I'm going to be showing you why we had a draw of liquidity to the buy side. So if you look at the monthly charts from the monthly perspective, I'm going to be clearing okay, let me move this to this side. So you can see the moment this particular candle actually started, we had a move, we had a fair value gap right here. So we noticed that price was moving bearish all the way into the close of last month being October, and all of a sudden price started moving impulsively to the buy side. And the reason was because price was reaching for this particular fair value gap on the monthly time frame, and that is what you're going to see. If I bring the early markup that I had earlier, you can see on the early markup, this is this particular shaded area right here. This is actually that monthly time frame fair value gap. So we saw price push aggressively into that particular monthly time frame order block right there. So this is how you can profit using this particular order block trading strategy, by applying the information shared in this video step by step. So if you find value in today's video, hit the like button, hit the subscribe button, and if you have a question or your thoughts, you can also leave it in the comment section. I'll be sure to get back to you. And if you probably didn't understand a lot I said in this particular video. I recommend you watch this particular video a couple of times to better build your conviction and strengthen the idea behind this particular strategy. So without further ado, see you in future videos.